Are the retail investors in MicroStrategy dumb? This is the assertion that a lot of traditional finance YouTube channels have been making, and they've been frustrating me with their commentary. No, the retail investor, I believe, is much smarter than a lot of people think, at least in TradFi, and they are long-term investors, not short-term investors. And so this is where I want to address two comments that kind of irritated me in a TradFi YouTube channel. Again, I think the guy was some CFA, whatever you want to call it. Doesn't matter, old school, doesn't believe in Bitcoin. And this is what they were saying. So they were saying two things. The first thing that they were saying is that the MicroStrategy convertible bond buyer doesn't care about MicroStrategy, doesn't care about Bitcoin. All they care about is volatility. They just set up a trade that wins as long as the stock remains volatile and grows even more volatile. And they don't really care about the direction of the stock. They just care about the volatility. They're just doing a convertible bond volatility arbitrage trade. What they do is they buy the bond and they sell MicroStrategy stock at the same time. And this video was so absolute about this is all what they're doing. And this is all what the buyer of the bonds care about. So absolute. Never mind the fact that the bonds of MicroStrategy, the convert strategy of Saylor, has been in the making for the past 3 years, but now you make a video, you want to get your 50,000 views, and so you're going to say, oh, it's all about volatility. They don't care about MicroStrategy. They want to kill MicroStrategy stock. And here's what that YouTuber said, which made me even more mad. Essentially saying it like this, that common stock investors are sheep brought to the slaughter at Saylor, saying that Saylor doesn't care about the common stock investor, that Saylor only cares about the bond, the convertible bond buyer and themselves through stock options and stock units. Never mind. Saylor has been a billionaire for a very long time. He's got his own multi-billion-dollar Bitcoin bag, and to me, reading this is very annoying when I remember listening to a 2-hour conference call just a month ago where Saylor talks about all he cares about is the common stock holder. There is a major delta, right? Since TradFi likes to talk like this with delta, there is a major delta in ethics between Michael Saylor and your standard TradFi hedge fund person. And again, throwing shade at Saylor, saying whatever he says is a word salad, or saying things like, oh, it's Enron style. Well, I could make a video about Enron if only I had the time. I would make a video about anyways, all of these things, I believe, do not necessarily apply in a digital blockchain finance type of era, and Saylor understands this, and believe me, for having listened to hundreds of hours of Saylor, there is not a Saylor podcast that I have not listened to. This is not a word salad. So what they say is that the common stock investors is being brought to the slaughter. What they say is, if volatility were to drop, then the price to NAV would fall back before 1x. I'll give you a hint, and I think a lot of viewers on the channels, I cannot remember a time where I paid more than I think 1.2x NAV on MicroStrategy, right? I remember buying MicroStrategy throughout 2023, right? Before it popped. So again, that right there is not understanding the retail holder base of MicroStrategy. The MicroStrategy retail base is filled with people who bought the stock at 30. And who now want to hold the stock for the longest time and have no interest whatsoever in incurring capital gains, right? And the reason why they say that is because, again, the reason why they say this is bringing them to the slaughter is because they think that all of the convertible buyers would leave if the price to NAV were to fall back to zero. They would all leave. So not only could Saylor not accumulate more Bitcoin because they would all leave, and we'll see why it's not true in my view, no financial advice, but also they would get screwed. These investors would get screwed because they bought it at 3x NAV and it would magically get back to 1 times NAV. One price price to Bitcoin would magically get back to 1 times, and then Saylor is just like an ETF, right? It's just like your BlackRock ETF, right? It's like I mean this is entirely I don't even know what to say. We live in a world of blockchain. What is the value of the Saylor brand alone? The Saylor brand. Think about Bitcoin. Bitcoin as culture. What image do you have? Who is the most famous Bitcoiner? Well, maybe Satoshi Nakamoto, but who else? Who else, right? Probably Michael Saylor. When you have brands, take the President of the United States, right? Many stocks have associated with his name. Just because of that, they trade at a huge price to NAV. Take any celebrity. They trade at a huge price to NAV. You know, Snowflake. I was covering Snowflake a while back on this channel. Slootman, just a popular CEO at the head of Snowflake, meant the premium was so much higher. What is the premium of Saylor? In my view, the price to NAV is the wrong way to look at it. It's gonna trade at a premium, and I've covered that multiple times in the channel. Anyway, let me not get ahead. I'm gonna go through over these 2 comments. So first of all, let's talk about the first thing. Oh, all they care about is the volatility. All we care about is the volatility. This took me a lot of time, but I have investigated this for us. So let's talk about that. Is it really all about volatility? So the claim is that the convertible buyers just care about volatility trade. They don't care about the stock. That's the last thing they care about. Well, let's look. We have the list. You know, plenty of people on Twitter have done screenshots of their Bloomberg terminal, and we have the list of who owns the convertible debt. So, who owns the convertible debt? Well, there's 2 people that buy the convertible debt. It's the no volatility arb trade and the volatility arb trade. So to say that nobody buys the convertible debt because they don't believe in the value proposition of a convertible debt is entirely. I mean it's just false. No financial advice, but it's just false in my view. You have insurance companies, retirement funds. All of these buyers of the debt are not in the gamma trade, the volatility trade. And it actually, if you look at the evolution of MicroStrategy, the people of the volatility trade, they've joined recently. They are not the historic buyer. And even as late as the latest convertible note that was raised, even that you had an insurance company, Alliance, ETF, there's ETFs that buy this debt. I'll give you an example, right? BlackRock's iShare convertible bond ETF. Guess what is the number 1 convertible bond in the BlackRock iShare convertible bond ETF? Well, it is the best performing one, of course. It's MicroStrategy. It's an ETF. Anybody can own that in their retirement account or whatever. It's an ETF. 4.6% of that ETF, 119 million, is in MicroStrategy convertible shares. And if you zoom and if you look at the shares, you can see here you have it. MicroStrategy fixed income, 27 million, 24 million, 22 million, 21 million, 16 million, 11 million. And there's a good half dozen of big convertible bond ETF that are just bought by normal investors, retail investors who just get exposure to the MicroStrategy convertible bond via the retirement account, via the investment account. So to say that this is just people doing convertible arbitrage, in my view, is false. It is not the case. Now, again, what is the case is that there's a lot of people who do it. That's true too. There's a lot of people who actually do convertible arb trade. So Calama's partner, if you see the number 2 here, and these are more recent additions, but Calama's partners, if you see that, they are definitely doing the arb trade. And you can see this is one of their prospectus. They talk about convertible arbitrage 101 and their hedge fund who specialize in that. And in their case, they are doing that. And so it's tough to know. Saylor knows, and Saylor... The point is, Saylor knows how many of these bondholders are doing the trade. But the question is, how many? How many? So it's not all of them. For sure, it's not all of them. In fact, I was very easily able to find many companies that don't do it. And we're talking about, more than $7 billion of convertible bond for MicroStrategy. So roughly $2 billion of that, at least $2 billion of that, is not going to be a vol arb trade. Point number one. Point number two, I recommend this. If you're interested in that hedge fund stuff, I recommend this amazing content creator from Quant Bros. I've watched his show many times. Absolutely amazing. Absolutely everyone. Look at this interview. He interviewed this former industry insider. And he asked them the question point blank, tell me what you think it is. Well, the first thing he said, it's very tough to know. That's the first thing that he said. I don't know. And he seems to think that it's more common in the US than in Europe. It seems to think that they don't do this as much in Europe. But when pressed, he gave the estimate of 75% of the MSTR convert bonds right now, bought right now, are by volatility arbitrageurs, which means that the other 25% will be just for exposure, people who believe in the bonds. And this is a recent podcast. Therefore, the earlier bonds that were issued, in my view, were necessarily bought more by people who just believe in the bond and bought the bond. So it's tough to know. I have no idea. We have no idea how many of these bonds are held by people who just buy for the volatility and who just care about the volatility. We have no idea. But it's not true that it's all they care about, and it's all of the buyers of this bond. It's just not that. It's a substantial there's a substantial number of buyers, and in my estimate, it's between 25% and 50% who buy the bonds because they want it, who buy the bond because they want the option to buy MicroStrategy. And if you look at the list, there's some California pension system that buys the bonds. There's the ETFs that buys the bonds. There's a substantial amount of people who buy these bonds just because it's the best convertible bond out there. The best performance, the one that has had the best performance. And if you watch Saylor is very straightforward. In every interview, he talks about, some people buy it for the volatility, but there's also some people buy it because it's the hottest thing that's ever happened to the convertible bond market in many, many years, because it's had the best performance. So it's a mix of both. I'm going to say 25 to 50%. It's likely now more people who buy it now are likely volatility arb traders, but I have no idea how many of this do it for the trade. Now, let me dig a little deeper about those arb traders. Do those convertible buyers who just care about the volatility trade and apparently don't care about Bitcoin, like some of these people claim, do they care? Do they really not care about owning the stock? Do they really not care about owning the stock? And I just want to talk about it. So anyways, so I'm not so sure about that. Because, of course, they buy the convert, right? That's what you do. And then you short a percentage of your long exposure. So the convertible stock, the convertible bond that you buy, it's debt that comes with an out-of-the-money call option, the right to buy in 4 years from now. So a very long-term call option, a call option you could not find in the actual options market, right? Much longer than your usual 2 years-ish in a leaps, for example. So they buy that very long-term call option out of the money, and they get the debt. So first of all, you're going to care about that call option. You're going to care about that right to buy the stock. So do they not care about the stock? Well, in my view, they do, because that has value. That's the right to buy the stock. And then they short the stock. But there's two ways to thinking about shorting the stock. The way that I think about them shorting the stock is they want more further downside protection in case MicroStrategy drops. So you have downside protection in the repayment of the initial bond that you got. That's that downside protection if Bitcoin doesn't go up. And if MicroStrategy doesn't go up, that's point number one. But they want even more protection. And so they want even more protection by shorting the stock at the same time, such that if the stock goes down, your short position gains in value. And that provides you even more downside protection. So one way that I think about this volatility arb trader is that they want to edge even more than the convert provides an edge. Okay, but do they not care about buying the stock? And this, in a nutshell, can be summarized by my statement right here. Short sellers are just future stock buyers. And I don't know why anyway. Short sellers are just future stock buyers. That kind of summarizes my thought, because Bitcoin is volatile, yes, but it's volatile to the upside. And because it's volatile to the upside, well, that means that short sellers eventually, they will have to cover their shorts as the bond becomes in the money. Conversion price greater than trading price. And so they will have to cover their shorts in the future at some point. And so how they cover the short? Do they cover the short by simply converting the bond into stock, right? And then their short cancels out because they get the shares that way. That could be an option that they do it. But once again, do you really not care about the stock? No, you do care about the stock, because at the end of the day, you're going to be buying back the stock for closing the short. So to quote Michael Saylor, volatility is vitality. These people care about the asset. They care about putting money into the asset. And I think it is foolish to go ahead and say that they don't care about whatever asset this is, for the very reason that A, they bought the right to buy the stock in the form of a convertible debt, which gives you the right to buy the stock, and then B, they also short the stock, which implies that they want to buy the stock later in the future. And if someone is bearish on Bitcoin, they think they're making a good deal. But as many of us are very bullish on Bitcoin, we know we're not making a good deal, because you're likely going to have to cover at a much higher price in the future. So this is no financial advice, of course, but Bitcoiners think this stock is going up. They think Bitcoin is going up, and therefore, essentially, people would short the stock the most. The more volatility. I don't want to go ahead and say that, but you would short this is a good thing for Bitcoin. This is another way to say it. This is a good thing for Bitcoin. The more someone buys MicroStrategy and Bitcoin without caring about Bitcoin, the better it is for the stock, because they may not realize the mistake that they are making. And they may not realize that they will have to buy it at a much higher price. I'm so sorry if this is a confused argumentation, but to me, this claim to me doesn't stand under analysis. To me, Saylor is monetizing the volatility. Let me move on to claim number 2. Claim number 2 is investors will get hurt when the NAV drops back to 1x BTC. And this is where it gets weird for me, because an ETF should trade at 1 times NAV. I could even argue an ETF should trade at 0.98 times NAV, because they have fees. So you should pay a little less, is even what I could argue. But it trades at 1 time NAV. That makes sense. Should Saylor company, should MicroStrategy trade at 1 times NAV when MicroStrategy was able to double the Bitcoin on the balance sheet in 11 months? So this is the latest 8K right here. I showed this the other day, right? So the latest 8K, what do we see? We see they increase the total number of shares by 104%, okay? And the total number of Bitcoin, they increased the total number of Bitcoin by 104%, and they only diluted by 28%. So that's the yield. You've created a Bitcoin yield because of that. And so that yield is in exchange for that dilution, but the growth in the Bitcoin under the asset, the growth of the Bitcoin per MicroStrategy share, the growth of that Bitcoin outpaces the speed of the dilution. So the stock, of course, is a no-brainer for anybody who bought it at 1x NAV during the bear market. But my thought here, and let me hold that thought for a second. But the point is, how about people who buy it with a premium, right? So, anyways, if you look at this, if you were to buy the stock at a premium, so if you bought it at one times NAV, what happens is that you really get a double in your Bitcoin, and you really earn the yield, and for you it's a no-brainer. But if you bought the stock at more than 2x NAV, so let's take an example. The example I put right here is you buy the stock today, you spend $93,000 today, you get 0.37 Bitcoin. Right, so that's roughly the math here. So you pay a premium, right? Because Bitcoin is at 95,000, and so you pay 95,000. You're gonna get 0.37. You get this little old data here. So, anyways, that sucks, right? You overpaid for your Bitcoin technically, but she didn't buy Bitcoin. You bought an operating company that is growing its Bitcoin buy. So end of year 1, what if they do a Bitcoin yield of 25%? You get a 0.46. End of year 2, you get a 0.58. End of year 3, you get a 0.72. End of year 4, you get a 0.9. And so you break even halfway through year 4. So halfway through year 4, it's as though you get 1 Bitcoin, right? It's you grew your Bitcoin exposure grew, and then do that for a full 10 years. What do you get? You get free Bitcoins. You get free Bitcoins. So 0.37 Bitcoin turned into free Bitcoin. If I assume that Michael Saylor is able to generate a 25% BTC yield every year by playing the volatility game, by, this is one way to think about it, because now that the QQQ seems to be secured, now that there's a perpetual bid, what Saylor does is you should issue at the market shares when the NAV is very high, like a 3.5, and it's the role of a retail investor to make sure they don't buy at 3.5. You want those automatic buyers to buy at 3.5, and as a retail investor, maybe you want to make sure you buy less than the peaks. Maybe you buy at 2x NAV. And so if you do that, you have protection. But even if you overpay, over time, the growth in underlying Bitcoin over time should offset you overpaying for the stock. So that is the theory behind that. Again, this is no financial advice, and I'll conclude showing you this website right here, which is the NAV over time. And of course, if you follow MicroStrategy, you've seen that before. That's sailortracker.com. You can see that is the growth in Bitcoin per share over time, and you can see they've kept growing the Bitcoin over time. So you are not buying Bitcoin, you are buying a operating company that stacks Bitcoin. And so over the long run, it makes sense, in my view, to buy MicroStrategy, at least for me. And if it's around a 2x NAV, I find that reasonable. Again, it's just for me, right? No financial advice, but I find that more than reasonable. And that's because it grows over time. Now, of course, if you are a short-term TradFi, make money now, buy options, expiration 3 months out, make money right now, make money today. Of course, you're gonna think this is a scam. Because you're not thinking long term enough. But most Bitcoiner, and this is where Saylor is consistent with himself, most Bitcoiners buy Bitcoin for the long haul, if not forever. If you are into Bitcoin, your goal is to buy Bitcoin and hold it forever and then borrow against it. It's a one-way trip. You don't want to get back to fiat. Once you move to Bitcoin, you want to stay in a Bitcoin standard. And so that's why it's so important when you look at MicroStrategy and Saylor, and what he says, is I promise you I won't sell. I guarantee you I won't sell the Bitcoin. So anyways, sorry for a confused video. This actually took me way too much time to make than it should have. So please like the video. I really appreciate that. This was not financial advice, not investment advice, just entertainment. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful day.